let's get started. Hi, my name's Marissa Waxman, and I'm with the City of Philadelphia's Department of Finance. I'm here today to tell you about the new Longtime Owner-Occupants program, a new real estate tax relief program. And what I'll do today is go over for you how the program works, all of the key dates and timelines, walk through the application and all the materials that your folks are going to see, and answer any questions you have so we can make sure that you can provide as much constituent service as possible, and I'll answer as many questions as I can. So first thing is, this is the Longtime Owner-Occupants program, and it is brand new. How many folks have heard of the homestead exemption? All right, so pretty much everybody here. So that was a program for homeowners we introduced last year. We're worried some folks might see this and go, oh, I already did this. The loop, is actually new, and it's sort of more. It is for a smaller group of homeowners, and it's sort of like expanded turbo benefits for the folks that are eligible for this. What the Longtime Owner-Occupants program is for, it's for homeowners who have been in their property for at least 10 years. That means they have to have been there since at least July 1st, 2003, and whose property values have increased significantly as a result of the reassessment. Basically, Philadelphia last year undertook a reassessment of all of its properties so that we could correct historic inaccuracies and make sure that we got to a place where all of the values on properties for tax purposes were fair and accurate. But because of some of the issues in the past, that meant some folks are going to see a significant jump. And this program is to help homeowners in that situation deal with that. So there's a somewhat complicated formula to figure out what constitutes a significant jump. It's if you take the new 2014 value, subtract 30,000, that's the amount of the homestead. If that value is more than 3 times their value last year, the property is eligible. Now we know that that's not the easiest calculation for homeowners to do sitting around at the kitchen table. So one of the things we'll have is an online eligibility widget, I'm calling it, where all you need to do is type in the address and it'll tell you whether or not the property is eligible. Have folks used the AVI calculator? It's going to be very similar, very simple, mobile optimized, so it's really good if you're out and about and just pull out the smartphone and you can do it on there. So the first thing, you put in the address and it'll say, if it's not an eligible property, it'll say this property is not eligible. Then you're done, just move the folks along, help them with their next issue. If the property is eligible, it'll walk them through the rest of the eligibility criteria for the program. So as I was saying, it has to be somebody where the property value changed according to that formula, that they've been the owner-occupant since at least July 1st, 2003. The property can never have had a tax abatement. This is sort of viewed as the counterbalance to the tax abatement for the new construction and the rehabs. They got a 10-year break. This is for folks who the neighborhoods changed around them, their property values changed a lot. This is a 10-year break for them. So the next criteria, in addition to not having a tax abatement, is the property has to be tax compliant, and that means 3 things. Number one thing that we would love to see is that the folks are fully paid, up to date on their real estate taxes. If they're not fully paid, they need to then either be current on a payment agreement or have an application in to get a payment agreement if they hadn't had one. So that's what it means to be tax compliant. And so that's what we're looking for from folks. This applies to residential properties, and that's your single family homes. Also multi-unit properties up to 3 residential units and 1 commercial unit. So say somebody's living in a duplex, then their family live in 1 unit and they rent out the other, still eligible. If it's a store on the 1st floor, they live upstairs, still eligible. So single families up through those smaller multi-unit properties. There are also income restrictions for this program, actually passed in Harrisburg last night by the state Senate. They're based on household size, and it's 150% of area median income. The materials I handed out for you that I'll go through with you have those criteria for 1 person, 2 person, 3 person, all the way up to 8 person. We even do have the information for households that are 9 people and larger, but it's just hard to cram all that in on the printed materials. They're fairly generous guidelines. A lot of other programs that may be providing assistance are for the very low income. This is actually going to let a lot more folks in. Just to give you a sense of how many folks are eligible for this program, Philadelphia has just under about 500,000 residential properties. Of those, about 80,000 had that increase in their assessed value. So less than 1 in 5 homes are going to be eligible for this. And that's just the property value changing. Then among that 80,000, the folks would also have to meet all those other criteria about the income, tax delinquency, living there for more than 10 years. So that's the group. So it's going to be a fairly small group in the end that are eligible. Homestead, we were trying to sign up hundreds of thousands. This is going to be, 10,000, 50,000, 15,000, maybe 20,000. So it's a much smaller group. And they're going to be concentrated in certain areas. And I'm sure you guys know your districts. You know where the values went up a lot in areas where they didn't. And just a reminder, just because somebody's assessed value went up doesn't necessarily mean that their tax bill's going up. Because what we did at the same time was drop the tax rate. So somebody, even if their value doubled, with the new lower tax rate at 1.34, they could actually already be seeing a break in their tax bill without this program. So that's just something to keep in mind. And again, there's going to be that eligibility widget, which should be live next Monday, where all you're going to need to do is ask somebody, well, what's your address? Type it in, and it'll tell you eligible, not eligible. So we're going to be rolling this out starting the first week of December is when we're going to begin letting folks know. We're going to be mailing out to those 80,000 or so eligible properties the materials you have in front of you. And so there's 3 pieces in here. The first is our cover letter, just as a quick overview of the program. The front side is in English. The back side we have in Spanish. And just to let you know, this is English-Spanish, but at our hotline, we've got full language line access. So folks can call 686-9200, and they can get assistance in any language they need it in. Additionally, our website, which is going to be www.phila.gov/loop, LOOP, will have information in English, Spanish, I think Vietnamese, Chinese, and Khmer, and French. And it'll have the applications in those languages, the full application, as well as the brochures that folks will be getting in the mail, so that we'll be able to help folks in different languages.
Say that website again, please.
www.phila.gov/loop, the Longtime Owner Occupant Program. You guys may have heard about this early on as the Gentrification Relief Program, and we just thought loop, a little catchier. And Longtime Owner Occupant, folks will be able to say, hey, that's me. I'm in a Longtime Owner Occupant. And feel free to stop and ask me questions.
Is the website going live the first week of December?
So the website will be live the first week of December, maybe up a little earlier to get you to play with, if you want to play with it. But we're going to have it sort of ready, to be live for the grand public for that first week of December. We're also, with the homestead, we were trying to reach everybody. And so we were putting up bus ads and all that stuff because we were trying to reach everybody. Because this is only a targeted group, while one neighbor might be eligible and the people next door may not be, we're really focusing on reaching out to those properties that we know are eligible. We're not blanketing the neighborhood. We're not sending everybody the application because it's just going to wind up with, the folks who aren't eligible being either confused or upset that this program isn't for them. And then our customer service folks will spend their time explaining to folks why they can't get it and not have time to explain it to the folks, how to get it when they really do need it. So we're focusing on mailings.
Are those properties broken down by legislative districts or councilmatic
So
districts?
I've got them by councilmatic district. We may be able to get them by legislative district. I'm not sure. I'd need to go back to my guys and ask. Generally, I can tell you high concentrations in South Philadelphia, some in West Philadelphia, some in North Philadelphia, very few up in the Northeast, just because those values didn't change the same way. So it's sort of, if your constituents have been screaming, this is probably coming to your neighborhood. If the values haven't changed that much, probably not as many folks eligible in your neighborhood. But I'll work on seeing if we can get it by legislative district, because that may be helpful. And so as I was saying, when we're going to start, we're going to mail these out, but we're also doing phone calls. We're doing both robocalls, which are good, but also live operator outbound calls with somebody there who's actually staff who can start answering questions and helping people through the process. So where we have phone numbers, and we've got phone numbers for about half of those properties, we'll be doing those calls, emails where we've got them, multiple mailings. And so it's really going to be a personal one-on-one type of outreach as opposed to, billboards. So that's how we're handling it. So for the first piece that folks will see is this cover letter that we're just outlining what those requirements are. And again, it's, you've had to be there the 10 years since July 1, 2003. You're only getting this if your property value made that change. You have to be up to date on your taxes. You have to meet the income limits. You can never have gotten a tax abatement. and you've got to be sort of the right size residential property, which is no more than 3 residential units and 1 commercial unit. So that's the first piece they'll see, and this is just sort of static for everybody. The next piece they're going to see is this brochure that I've handed out to you. And I do want to reiterate, there have been a couple little changes, so this won't be the final version that goes out. So, feel free to scribble on these for your own notes, but please don't start photocopying and handing them out because they won't be the same as what actually gets out in the mail. And particularly what we're really excited about is these brochures are going to be personalized. So right now, pretend that you are Bernadette or Michael. So on the cover, you'll see the important tax information inside for Bernadette or Michael. And this, again, on the inside, just goes over what the program requirements are. On the side panel over here, it says, what do I need to do? First, figure out, am I eligible? But then you need to apply by January 15th. We're going to start mailing these out in the beginning of December. It's a quick turnaround to January 15th, which is the deadline. But the reason for that, 1, it's the law. 2, that gives us time to process them and give people that approval or denial before March 31st when the tax bills are due. So, really, there's no reason why anyone should wait. Folks may ask, I already applied for the homestead. Should I still do this? The answer is yes, right away, because this is going to get you a bigger discount. If they say, but I missed the homestead, can I still apply? Yes, you're going to want this discount. It's sort of like there's no downside to doing this. It's either paying less money or not, whether or not you apply. And so we know most folks, they either apply as soon as they get it or right before the deadline. As usual, the earlier folks do it, the quicker we can process them, let them know if they've been approved, or if there's a problem, we can hopefully let them know that there was a problem. They can get back to us and sort of refile or whatever they need to do to make sure that they get this benefit, because it has to be in January 15th. So the other really cool thing I like in here, again, I said pretend you're Bernadette or Michael. So this is a personalized brochure to the folks we mail it out to that'll have their name, have their address, and it's going to show what their tax is in 2014 without this discount, and that's after the homestead if they were approved for it. It'll show what their taxes will be if they're approved for the loop, and then it'll show the amount of savings they're getting, what that discount amount is. And we think for a lot of people that's going to be a pretty powerful number, sort of push them towards it. Now, it's not a set flat amount for everybody because, as I was saying, you do that calculation to see if the property is eligible based on, your 2014 value minus 30,000 is more than 3 times your 2013 value. To figure out what you're paying in 2014, if you get the discount, you'll take your last year 2013 value, multiply that by 3, apply the 2014 tax rate of 1.34, and come up with your discounted tax amount, which is lower than if you just took your new value and the new tax rate. The online widget, because we know that's not a fun calculation to do, will have this same information presented when you put in the address. So it'll show, this is your address. This is how much you would, if it looks like the property is eligible, it then will ask you questions. Have you lived there 10 years? Are you up to date on your taxes? Do you meet the income limits? If you answer the questions and it looks like you're eligible, it'll show you, here's your taxes without the discount, here's your taxes with the discount, and here's how much you save. So you'll be able to help people very quickly and say, this is what it means to you. It'll be a very sort of personal conversation you can have if you're able to have that, online access whenever you're dealing with folks. It's what all of our customer service folks will be using when they're on the phones with folks so that they can very quickly pull up and say, this is what it means to you. Because we know it's going to be, it's different for everybody, but we'll be able to quickly show what that means. So the brochure, again, on the back has all the contact information if folks need more info. That's that website again, the www.phila.gov/loop. And also the hotline number, which is 215-686-9200. They're open like 8:30 to 6.
I just had a question because I know when we were doing the homestead applications, we have situations where people will pass away, they won't have a will, the kids will just be in the home, and there was like
right. So we haven't gone through that process, which was sometimes difficult. That when we're talking about an owner occupant, obviously number one way to figure that out is it the person on the deed, but also for the LOOP program. We accept an owner-occupant is somebody who can show equitable ownership. And so that'll include folks like you inherited the house, but your name hasn't gotten on the deed. You, unfortunately, were the subject of deed fraud and your house was basically stolen. Or you in some other way can demonstrate your ownership interest in this. And what we're doing to make this really easy on folks, and I'll get to the application in a minute, is they're going to self-certify that for us. We may come back later and ask you for more documents and things like that, but to get through the initial application, all you have to do is just sort of say, no, this is me, I'm the owner. And similarly, I'll get there in a second on the income information. Yeah?
What about in situations where the parent who's now deceased left it to several children?
So as long as one of the owners is an owner occupant,
Gotcha.
then it works. If they left it to somebody else entirely, and this is a niece that really has no business, they're just letting live there, not the same. But if there are multiple owners for a property, there just needs to be one of them is an owner occupant. It doesn't need to be everybody on the deed or everybody with an ownership interest. So that'll be the definition of owner. We're making it more inclusive to make sure that folks who are in those situations and who likely have been paying the taxes and doing all that can take advantage of this program. Yeah.
But that person had to have lived there for 10 years?
Yes,
Okay.
that person. So whoever it is that's the owner, they have to meet that 10-year criteria. You can't have inherited it and moved into years ago when your mom passed away. You, the person applying, have to have been there for 10 years. And so that's, how that'll go. And one question what we might get is, the city's deed records show that the last sale date was 3 years ago, but it wasn't, I just refinanced and the deed was changed, or I took somebody off, or I put somebody on, or I got divorced and I changed my name back on the deed. You did a transfer like that. We're not going by that sales date because we know all of those things can make the sales date change, which is why we're asking folks. We can go back later and do the deep digging in the old deeds and find all that, but for folks who are concerned that the city's sales date on the records is the more recent date when something happened to their deed, we know that's a deed change date, and so we're not going to sort of bonk you out of that if your deed changed in the past couple of years. We're going to ask you how long you've lived there.
But you're basically saying if your name's not on the deed, but you've inherited because there's a will, then that also suffices.
Yes. Yeah. So, if you've inherited but your name didn't get onto the deed yet, that's good. But you still have to meet all the other criteria of having been there the 10 years, not tax delinquent, meeting the income requirements, everything like that. So this is the brochure. It'll be available, not personalized, obviously, on the website in all the various languages. But we're not really going to be doing a ton of just, handing these out to everyone because we really want to focus on finding the people who are eligible and making sure they know and trying not to bother folks who really aren't eligible for this program and won't see a benefit. There's also 2 other groups that we're not going to be sending these to who their properties might seem eligible, that maybe the property value changed enough that it would be. If it's folks who are already in the senior freeze program, those are our low-income seniors who have gotten in there and basically had their taxes frozen. There's no additional benefit from the loop, and so we didn't want to, confuse them, take up their time, try and ask them to fill out documents when they weren't going to see any additional benefit. So senior freeze participants aren't going to be getting this. They may call up and say, well, but my neighbor on this side and my neighbor on that side, and our values changed all the same, why didn't I get it? And if they notice that, you can ask them, are you in the senior freeze program already? And if their answer is yes, that's why. There's no extra benefit for them because already their taxes are frozen.
So 2013,
Yeah.
They applied as of this year.
Yeah, if they were already in the program and they're not paying any more than their 2013 in 2014, there's no extra benefit because basically the calculation with Loop, their taxes could go up a little bit, just not as much as if they weren't in Loop. If they're already frozen, they're not going up at all. The other group that is true for is permanently disabled veterans. They're 100% tax exempt anyway, so if they're paying 0 tax, really didn't make sense to us to bug them with filling out some forms because they're already paying 0. And there's a couple other things in there that are a little similar to that. Might be situations where the property already is exempt. So for them, we didn't bother sending it out because there was no added benefit to them. So those are the folks that are going to be getting it. Again, the folks who got a tax abatement should not be getting that. And that's whether it's a current tax abatement or one that expired on that property. If the property ever had a tax abatement, then they won't be eligible for this because basically they got the benefit of the tax abatement. You don't get to sort of double dip and get this one too. So that's the way it's set up. So that's the brochure, and that'll be online as well. And as I was saying, we're not going to sort of, cover the whole city in these, but they're available if folks need them. And so the last thing, which I really want to go over in detail, because I'm guessing how many of you think you're going to be helping folks fill these out? All right, that's what I thought we were doing here. So let's pull out the application. And the hot pink on this version is what's going to be pre-filled out when folks get it. So we're trying to make it easy for folks to fill this out. So it's already going to come. The top part here is like the mailing address and a barcode. The barcode's really important. The reason we want people to fill out the ones we mail them is they're barcoded, which means we can process them much quicker. It's got their personal account, property address account information in there already. So we can sort of zip those through. There will be blank ones online. But that takes, if it's all handwritten, it's a lot easier for folks to miss something, miswrite something, can really jam up their application. So we really encourage folks to use the one they got in the mail. And so the next thing right under the sort of the hot pink squares that'll have the mailing address and the barcode is the I swear to tell the whole truth and nothing but the truth section. That's up at the top. So we want to make sure that folks sort of see that first. Obviously, this is a tax benefit that we want to make sure that every eligible homeowner gets. We're not really interested in giving it away to folks who are not actually eligible. So we want everyone sort of up top read, I'm telling, I certify that everything I've put on here is right, and they have to sign and date. Really important that folks sign and date. If either of those are missing, it's incomplete. We can't process that. So it's real important to remind folks to sign and date. The next section is the basic information section. And we'll pre-filled in the name of owner 1, the name of owner 2. Now there will always be times where there may be 6 owners. We put the first 2 that are listed on the deed. The other 4, though, they can still apply. If they get this and it's that situation where the house was left to 3 kids but only one's in there, but kid 1 and 2 are listed but number 3 lives there, they can cross out the name of owner 1, write in theirs, and that'll be okay. But generally, if a house is owned by 1 or 2 people, you'll see that in owner name 1 and owner name 2. Under each of those, the applicant must add their social security number or their ITIN. And the reason for that is this program has income limits. And rather than ask people to run around and give us their W-2s and your SSI letters and your tax returns, just give us your social security number, which would be on all of that information anyway, so we'd still get it. But to make it easier for folks, we know it's a quick turnaround. We know that, it's hard to gather all that documentation together. You have to put in the social security number. That's what's going to allow the Department of Revenue here to use that to do income verification. And the Department of Revenue, security-wise, that's who handles this type of information for the city. They've got all the security in place to take care of people's social security numbers. They're the ones who have access to all of that financial information on people in the first place. But that's why we need it. If you skip that, there's no way for us to verify that you meet the income restrictions, and we would have to exclude you. So it's really important that folks put in that social security number. On the versions mailed out, we'll also have number 3 pre-filled in, which is the property address. We'll have in the OPA account number. Folks may remember that as their old BRT number. It's the 9-digit unique number that identifies each property in the city of Philadelphia. And after that is the mailing address, if for some reason it's different. For, most of these are owner occupants and they get mail in their homes, but sometimes, maybe their kids get it, maybe an accountant, whomever. There might be a different mailing address that they want to have on there. 6, we're requiring a phone number. If there's problems with this or if there's questions or things that we need to do, it's really important that we have a quick and easy way to get back to folks. So we require a phone number. Email is optional, but it actually, encourage folks, if they have an email and they check their email, it's probably the easiest way to get back and forth, because say there's a problem with their application, I can send them an image and say, this is squished, I can't read this. What did you mean here? So really urging folks to put their email on that too. That lets us get back to them quickly if there's any questions or issues with their application. Under that, you'll see the little note from us that says, do not include any attachments with your application. As I was saying, we're not requiring people to turn in anything else. No deeds or no wills of the person they inherited the house from, no tax returns, W-2s. We're asking folks to self-certify to that information that they're putting on here. If we need those documents in the future, which we might from some people, following up, checking later, and verifying, we'll reach out to you and ask for that. But it'll delay processing of the application if you start including extra stuff on there. If you write notes, if you do all sorts of other stuff on there, that means we have to take more time with it and it could be delayed. So unless there's really a real issue, folks should just sort of answer it as it comes, submit no more, no less, and that'll speed them through the process. So then we've got sort of the 5 questions down here, And we tried to make this, on the one hand, very similar to the homestead in terms of the form, because we got a lot of feedback from folks that said that was a pretty easy form to do. On the other hand, we stuck our new loop logo on top so that they didn't think, hey, I've already done this one. So the first question there at number 7 is at least one of the following true? Your real estate taxes are paid in full, you're up to date on a payment plan, or you have filed an application for a payment plan with the Department of Revenue. And that's where we're asking folks to self-certify that they're tax compliant, because that is a requirement for this program. You can't be a delinquent and get this discount. We'll also be checking that internally ourselves, but we want to, one, make sure that folks are, promising to us that they are up to date on their taxes. And folks, it may catch their eye too. If they're not, they may see this and realize they need to do something, get themselves into a payment plan, and take care of that before we can approve this. And there's information on our website and also through the hotline of how do you get to the Department of Revenue to arrange any payment agreements, to make it out. Please feel free to urge folks to pay in full immediately. We like that the most. And the school district certainly appreciates that. So that's question 7, though. Is there folks, either fully paid, have a payment agreement that they're current on, or have they applied for a payment agreement? The next question has to do with, are you the longtime owner-occupant? Have you continuously owned and occupied this as your primary residence since at least July 1, 2003? And that's, asking folks just to make sure, owner-occupant. If you get questions about, well, what's a primary residence? Basically it's where you maybe are registered to vote, what address is on your driver's license, what address do you put on your IRS tax return, where your kid's registered in school. You may get some questions, folks, I'm in a nursing home. Well, it depends, are you using your nursing home now as your primary address for all that stuff, or are you still, thinking you might be coming out and back to the house? So things like that. But folks, if they have questions around primary residence, it's, where you spend most of the time, it's your main dwelling. The next question, number 9, is how many people live in your household? And that's because the income guidelines for this are based on household size, so we need to know how many people are in your household. In those multi-unit properties, what this means is that's just, in the owner's unit. If there's tenants running around upstairs, we don't need to count them, we don't need to know their income, but it's how many people are in the owner's unit if it's more than a single unit property. Then the next question is, what is the total income for all members of that household for 2013? And we know that, January 15th, folks might not have all their W-2s yet, might not have all of their unemployment statements, may not have everything. So they should put their best estimate. We'll have your social security number. We'll be able to sort of check back later, but put your best estimate if you don't know it for sure. Don't wait to turn this in until you've got the exact number, because then you'll miss the deadline. Do your best. On the back side of this, we go question by question explaining what we mean. And so particularly for number 10 on the income, we list out what types of income we're looking for, because it is a whole bunch. It's obviously the salary and wages, retirement income, TANF, interest and dividends, child support, alimony, I think disabilities in there, unemployment, I might have already said that, and wages and salaries of anyone over 18 in the household. If, somebody under 18 who's got a part-time job while they're in school, that doesn't count. But so we list out on the back here. Also in that number 10, it gives you those ranges for each household size. So for a household of one person, the maximum income is $83,200. A 4-person household is $118,800. And that's 150% of area median income by household size as set by the Department of Housing and Urban Development for the Philadelphia region. So that's on there. Those income sizes are, again, in the brochure. They're obviously on our website, so to refer back to them. But they're there. So that was number 10, where we ask for the income. And number 11 is us just double checking on that long-time owner occupancy again. We want to know, when did you become the owner occupant here? Give us the month and the year. And that's for most people going to be the date they bought the house and moved in. But for some folks, it may be the date that they inherited it. There's going to be some folks where it's going to get messy and complicated. They were in the house, then they moved out for a while, then they moved back in. We'll work through those individual ones, but for the most part, folks, have been either they're in or they're out. And so that's how this works. So that's the application. Do folks have questions about any particular sections?
For an individual who has one of those unusual circumstances, we're trying to help them in our offices, are we to refer them to your number if they have one of those unusual circumstances?
What I would say is definitely fill this out. You know, if there's something they need to note on there, it's going to slow down processing, obviously. They can call the phone number first and get some guidance about maybe what they would want to note there. And as we go, we'll be developing more and more sort of FAQs to know what those are and try and get our standard responses. So it's great to have them call in that hotline 686-9200 because the first time we get that question, it'll take us a little while to sort it out. But once we've answered it once, we'll be able to update everyone in the call center so the next person that calls in can get an answer right away. So absolutely have them call in. Absolutely, though, sort of, you know, once they do that, still apply. I'd hate for anybody for it to turn out they're eligible, but they missed the deadline trying to figure it out. So try and get the applications in, but absolutely call the hotline. The first time might be a little hard, but once we've got it, you know, answered that type of question once, we'll get it, and we'll wait till the next unusual case pops up and struggle through the next one. Yeah?
Will this, will you have to apply every year?
No, so it's a one-time application, and it's good for 10 years. It's a 10-year discount. And so with AVI, this is a year where we've had a lot of properties have a lot of property value changes. So there's about 80,000 this year. The program will still be around next year, but it'll be eligible for people who between 2015 and 2014 saw that tripling. And since through AVI we've already gotten to that fair market value, it is going to be a much, 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 much smaller group that are eligible next year. So just because somebody's eligible this year, they likely won't be eligible again next year. So they really need to apply now. There's no sort of hopping into it later. They have to do it this year because unless their property tripled from last year and then triples again, they wouldn't be eligible. Homestead does work differently that, you know, if they missed out this year, missed the deadline, they can still apply. They won't get it this year, but they can get it next year. For this is sort of like a very, you know, short window of opportunity for most folks. So you're going to want to get it in this year, not roll the dice and see if somehow you're eligible next time. Other questions on the application or things like that? So, I mean, basically that's it. We're hoping, I just wanted to also get some feedback from you, what sort of questions you thought folks might have from this, or what issues they might have if you've helped folks through the homestead, how this might be easier or harder. Yep.
These applications have to be mailed in or can they be faxed in?
So they have to be mailed in, and part of the reason we have to be mailed in is the security. Because they've got the social security numbers on there, I really want them mailed into the P.O. box. There might, but I am not promising, might be a drop box location, but I've got to make sure it's one that's locked and monitored and everything like that. So I really want these mailed in. We're not doing faxes. Also, with the homestead, folks could apply online or over the phone, but again, because we're going to be having to control the social security numbers, this is a paper-only application for this year. So there aren't going to be those over-the-phone options. So it's important that folks ideally use the one we mailed them. There will be a return envelope in there. It's not postage paid, but, you know, for less than 50 cents, you could probably get a couple $100 off your real estate tax bill. So if that's the choice you want to make.
And what, how do you know that, how will they know that you've actually received it and didn't get lost in the mail?
So we won't there's no way for us to track them as they come in, but the turnaround will be pretty quick on our processing. And in Homestead, only the denials got a letter. For Loop, we've realized we're going to send everybody a letter, either you're approved or denied. Yeah.
When can they expect the letters approving?
So those should be out the end of March, which is when also the real estate tax bills are due. And let me walk through what people should pay, because that's a good question. The same time that folks are getting these in the mail will be about the same week that they get their 2014 real estate tax bills. And obviously, since they won't have already been applied for the program and won't have been approved, the tax bill is going to have that higher number, the number without the discount. But since this is supposed to provide relief to folks, we know it, you know, we wanted to create an opportunity for them to pay that lower amount. So if you look at all of this information, you think you're eligible and you're applying, if you have applied, you can pay the discounted amount by the normal deadline, and that's March 31st. Or if you pay by February 28th, you get an additional 1% discount. So for folks that are applying, they can pay that discounted amount, and as long as they pay it on time as normal. If they're approved, great, they're done, nothing else. Now, if they are denied for the loop, if they put it in, they're going to have to come up with the difference by April 30th. We won't add any interest or penalties, but we'll give them that extra time to come up with the difference. Basically, we don't want folks putting in an application just so they can delay paying the full amount. But we do want to make sure that folks who are eligible don't have to try and come up with the full amount and then get refunded. So if folks look like they're eligible and they are applying for the program, they can pay the discounted amount. And if they've misplaced this brochure that tells them what that amount is, you go to that online tool and you can just, what's the address? Okay, here's the amount, here you go.
And these are the only qualifications, the qualifications that we went over for. So 10 years, meet the income guidelines, have owned the property and lived in it for the last 10 years.
No tax abatement, up to date on your taxes,
so,
yeah.
So if someone comes into our office and they meet all of these, because I'm really thinking about our folks in our district who are not necessarily seniors, but on that senior.
No age restrictions in this.
No. But
Yeah.
but they may not. I want to be clear. If I tell somebody, okay, you meet all of these qualifications and you're gonna qualify based off of what we learned in training, and I tell them to pay the $9.90, for
Yeah.
example, that's on here, that they're not gonna come back to our office in 3 weeks and say we got a letter and we owe the city $1,000 because.
Right.
We
Well,
didn't
okay, so yeah,
qualify
so
for that.
those are the qualifications. You also, if you're then helping folks, make sure they fill it out right, or make sure, because we saw a lot of homestead where people, is this your primary residence? And they check no. And then later they get their denial letter, why'd you deny me? This is my home, and one of the nice things is we'll have a PDF copy and we can pull it up. And, I understand that's what you're telling me, but actually on your form, that's not what you wrote.
Yeah.
So, we can only go by what's on the paper, not what's in their heart.
No, I understand,
So-
but I just wanted to be clear in terms of
Yeah,
qualifications.
these are the qualifications. This
Yeah.
is, how this rolls.
Property lien is a factor, and can you go over the formula to determine the loop amount?
Sure. So property liens are a factor on the real estate tax side. As I was saying, you have to be fully compliant on your real estate taxes for the property you're applying for. Ideally, I'd like people to be tax compliant on all the properties they own, but it's only for this property. So if they have liens, if they have outstanding balances that are not up in an up-to-date payment agreement, they won't be eligible. But it does not.
Utility lien.
Utility liens, commercial refuse liens, which they actually shouldn't be in this program anyway, but we're just looking at the real estate tax delinquency on this. So I'll go over the formula one more time. And I know it's sort of annoying, and that's why we built the calculator, but the formula for how to figure out what the discounted amount is you take the 2013 market value, certified market value, multiply that by 3, multiply that by 1.34, which is the 2014 tax rate. And so that's how folks will get to their new value. Without the discount, it's simply you take your 2014 value times 1.34. So the example that I've basically worked out in my head with round numbers is, say there's a property that last year was $25,000. This year it's valued at $130,000. To see if that's eligible, you take the new value, $130,000, then you subtract out 30 for the homestead, so you're at $100,000. Then the question is $100,000 more than 3 times last year? Last year was 25, so 3 times 25 is 75,000. 75,000 is less than the 100,000, so they're eligible. And then to calculate the tax bill, you take that 75,000, which is 3 times 25,000, multiplied by 1.34%. And I'm forgetting what the tax bill amounts work out in that, but basically there's a couple $100 savings in there. And so the calculator online will be able to show that, though, for each individual property, and has the information on the website, so that folks, if they want to dig into what is that formula. And actually there's a little note down here under the personalized information that this is the section that we anticipate, folks really aren't going to want to read. We wanted to have it in there for the folks who really love it, but this walks you through that calculation, and it has that there. So it'll be in the brochure, But really, we expect, most folks, they just want to know about the dollars in their pocket. And we're really going to appreciate your help in getting the word out. And we know it's tricky because it's not everyone is eligible, but for the folks that are, it's going to be really meaningful, and we want to make sure that they get this.
As we have to go back and train the others in our offices, do you know when the modified brochures will be out?
So they'll definitely be up on our website by December 2nd. But we're still sort of working on this. And so that's when it'll all be up. Really, the only thing that's going to be modified in this is, one, it won't have the sort of faux Bernadette info in it. And two, there had basically been questions around the eligibility income guidelines. That'll be updated, that there definitely are eligibility income guidelines. But all of the rest of the criteria are staying the same. And actually, the criteria is the same. It's just up until the state Senate voted yesterday, we were at there might be income guidelines. Now we are at there are income guidelines. So that's the key thing that'll change in here.
The URL for the YouTube presentation that you're doing, how will
No idea where that'll be yet, but we've got your emails from RSVPing to this, so we'll send you out a note.
Now, are you going to share, you said it was broken down by councilmanic district, are you going to share that information?
Yeah, I need to sort of check with my guys, but we're going to try and do that and see if we can also do it by state legislative district. So we'll see. I just can't commit to that now, but it's a good idea to take back and see.
If you can't commit to the legislative district, can you share the councilmanic district information?
Yeah, I just need to check with them.
Okay.
Even by zip code,
Mhm.
helpful too.
Yeah.
In terms of your robocalls, when will they start?
We haven't nailed down the time yet.
And I'm only asking because that will determine when we get people
Right,
in
so
our office.
it'll likely, I'm somewhere in between, and give me your feedback. What I want to do is I'm trying to catch folks the day before it shows up in the mail. So we're going to start mailing them out like December 2nd. So I think I might actually, the day they go into the mailbox is maybe the night I'm going to put the calls out, which is Monday, December 2nd. But we might actually switch to Tuesday, December 3rd. So it's either December 2nd or December 3rd. Because I don't want to do the calls too early and then folks have no idea, they forget about it by the time it shows up. But I want to do it, hopefully, if I can, before it comes to the mail so that folks keep an eye out for it. But nothing is super certain on that yet. But it's around that first week of December is really when folks will start hearing about this, seeing it, getting the information either by phone, by mail. So that's when you can expect it. The week before that's Thanksgiving. We're not expecting a lot of action on this at all.
So it's kind of funny that I came to this because when you were saying the areas of the city, we do the Northeast. So
Okay.
Thinking it might not affect us too much, but I had a constituent today who came in who everything you said is him.
Okay.
His house was valued at $25,000, now it's almost $150,000.
Yeah.
Makes
So,
no
I
sense.
mean, he's your guy.
But anyway, what about people that have done the first level appeals and things of that nature?
Right. So basically, if they've gotten that first level review and it's already done,
Some
whatever that,
have it.
right. So basically, apply for LOOP. You still want to apply. If for some reason they win their appeal and the value goes down so much they're no longer eligible, well, then they're no longer eligible, but their value went down and everything's great.
Okay.
Don't, if you've put in that first level review or if folks have filed formally with the Board of Revision of Taxes, still fill this out because if they're not successful on their appeal, you don't want them to miss out on the loop.
Will they still receive that from the department then?
Yes,
Okay.
yeah.
All right.
Basically, the list that's used to determine who gets this in terms of the property value changes is the same as the list that was used to generate the tax bills that'll go out the same week. So that's sort of the cutoff date. So it'll match the tax bill, and that list is basically, I think, from November 1st. So, if there was a change well before November 1st, it should be incorporated. Changes after November 1st we wouldn't know that yet for these. So we just work through that. But, if folks are in that position, as much as, ideally I don't want tons of duplicate ones and I don't want these from folks who aren't eligible. But if there's a question, absolutely apply. If you think, if there's the possibility they're going to be eligible at the end of the day, apply.
I'm sorry, I know, I apologize.
That's okay.
You mentioned the customer call center hours. Can you tell me what those are again, though?
I'm going to say, and Tim, correct me if I'm wrong, 8:30 to 5:30.
Thanks, I'm not completely.
Okay,
And will there be and I'm asking because sometimes we get people in our office and we need questions like we need questions answered, so will we still have to call that line, or
Yeah,
will there be
and
a
really,
dedicated line for?
there's not a dedicated
Okay.
line for super users or anything like that. Everyone call the call center, but it's going to be staffed really well.
Okay.
Also, one of the things, this is a much smaller universe of eligible folks than the homestead. We think it's going to be a bit more manageable. And by giving you guys that online widget tool, it's sort of, you'll be able to do that first level yourself of you're not eligible, and hopefully that takes a whole lot of questions that you might be asking a call center off the table. But then, yeah, you'll have that 9200 number. And as I said, it's got all the language line access too. So if you've got someone in your office who, wants to communicate in a language other than English, they can do that on the phone, no problem.
So if we can't call you guys about it at all?
No, basically because there's no way I could handle it. The service you would get would be much slower because I'm never at my desk.
I have one more question. If I'm helping Bernadette and Michael and they get this, and then they get, I'm like, all right, call me when you get your taxes, you'll definitely be eligible, whatever. And then they get their taxes and it says, oh, you owe $1,800, but they want to pay it before February 28th or whatever the 1% deadline is. Should I tell them to fill it out as, you pay $990, or should I say you pay $990 minus 1%?
If they're paying before February 28th, they can take off that 1% discount themselves.
Okay.
Yeah.
Okay, that's it.
And again, if folks wind up overpaying, some folks may still, pay the full amount, be like, I don't want to risk it, I'm going to pay the full amount. Then basically they'll have the opportunity, if they want, if they are granted the loop later, to get either a refund or a rolling credit to the next year. A lot of folks also pay through their mortgage companies. The ones that we automatically notify the mortgage company, if their tax bill changes because they've been approved for the loop, we'll update the mortgage companies so that they'll know.
Getting back to the mailing issue, as you know, people do wait till the last minute to mail things in. And so let's say we have somebody come to the office on January 14th, and they mail it, and then they have no way of knowing if you've received it by the deadline.
You're going to make me put this on tape. We do a little bit of fudgy room on the end. We are not monsters, but again, particularly folks want to know the answer to this as soon as possible. So do what you can do. There will be people who, there's only so far you can push that.
So postmarked by the 15th?
We want to receive it by the 15th.
You want to receive it?
I want to receive it by the 15th. Now, you guys just went over this application, so you saw it's going to take you, the estimating your income is the only thing that requires much. I know. But
I just know there's going to be someone in my office on January 15th.
There is.
Right. Yep.
And,
asking where can they drop it off.
Well, they-
right, and so with the drop off,
Here and drop it here somewhere?
so here's the thing. I don't know yet. As I was saying, because of the social security numbers, I'm not going to commit to a drop box until I know I've got a secure drop box. Obviously, though, you'll be able to, as it gets closer, we'll make sure that the call center and the website, if there are, in-person drop-off, if there's an in-person drop-off location, we'll put that out there closer to the end. But if it's before January 10th, just mail it. And even if now I don't recommend this because, I don't know how you're set up to handle information with folks' social security numbers. But if for some reason you're getting them into your office, and folks aren't mailing them directly, just put them all in an envelope, send them to the P.O. box.
Or the 14th.
Yeah, no, I know there's always the stragglers. We do a little bit of wiggle room, but there will, but just be prepared. There will be people who it won't be timely and we won't be able to accept it because you've got to cut it off somewhere. Okay. So again, I just want to hit the highlights again. And if you have questions, feel free to keep asking them. I'm happy to stay here for a while, but got to be the owner occupant, but that definition does include folks who inherited it or had some other ownership interest. Had to have been in there as their primary residence since at least July 1, 2003, meet the income guidelines, be up to date on their taxes, never had a tax abatement, and the change in value has to meet that somewhat complicated formula. I think your best friend through this is going to be that online search. We're going to have a little button that just says, am I eligible? You click it, it goes through a little, I promise to use this for good and not evil. Enter in the address. And, it'll pop, if the property's not eligible, it'll say, I'm sorry, you're not eligible for this. And if it is, if the property's eligible, it'll guide the person through those next questions. Have you been there since, July 1, 2003? Are you up to date on your taxes? What's your household size? What's your income? And that's pretty much it. So I really appreciate you guys coming down here because I know that, you know, you're going to really help me on the front lines of getting this information out to folks and getting them in. We really do want the folks who are eligible for this to take it because, you know, we know that these increases are going to be a hardship. We want to make sure that the folks who will struggle with that get the relief they're entitled to. So I really appreciate your all coming down here.
Thanks for the opportunity.
No, no problem. And again, I'll make sure we've got your list, so we'll email out updated documents when they're changed, link to, you know, this on YouTube, so if you want to share it around the office, things like that. All right, thank you, everyone.
Thank you.
And I've got it, if you didn't sign in, I do have a sign-in sheet down here. Yeah. Oh, we've got one final announcement about the homestead. This is Tim,
Hi,
Homestead
everyone.
Guru.
So I think we
Homestead
were
Guru.
in touch with some of you about the RS-50, so I'm Tim.
Oh, okay.
And about the homestead, of course, continue to encourage folks to apply for it. They might not, they will be considered for tax year 2015 and beyond. But for new home buyers, they have till December the 1st of this year to be considered for tax year 2014 and beyond. And
Will you
Sorry.
send that in an email?
yes, I'll send an email to summarize this. Again, if they purchased a new home after the last deadline, September 13th, they should apply for the homestead. There's some additional requirements. They should fill out the affidavit, which will require that they note the date of purchase, and they should include the settlement paperwork, or even better, the deed if it's already prepared for them, and I'll send out that information. But of course, if someone mentions to you that they just recently purchased a new home, encourage them to apply for the homestead through the new home buyers provision. But I'll send this information out to you, but just as a reminder.
Thank you.
Great.
Thank you.
Thanks.
So much for most